5 a.m. in New York City. Good morning, I'm Vonnie Quinn in for Danny Berger with your Bloomberg Brief. Here's what you need to know. We have a plan. A little bit of one anyway. The US and China wrap 2 days of trade talks with a preliminary agreement, at least to ease tensions. Musk's regrets. The billionaire posts on social media that he, quote, went too far with his comments about President Trump. And we're counting down to the latest CPI data plus a 10-year Treasury auction. So let's have a look at these markets and how they're performing. Futures-wise, we are down, but fractionally, not so much for the Russell 2000, but for the S&P and the Nasdaq 100 futures. Again, a few hours to go before the beginning of trade. There is the idea out there that perhaps more could have come from these 2 days of talks. Nevertheless, the Geneva Agreement will be put back into place, and we'll see what kind of an impact that will have on markets today. Greg Valliere just saying in the last few moments we have glimmers of hope. If we turn to bonds, we're also seeing just a little bit of a selling off, particularly in the US 10-year Treasury. The yield at 448.33. We have a major 10-year auction today. It's going to be a test of appetite, and we'll be watching it very, very closely. We had a fine 2-year auction yesterday, but with 10s and 30s coming up the rest of the week, we're going to watch those for any signals of any kind of fragility. Now let's get some stocks to watch. Let's head across to Valerie Teitel. Valerie.
Good morning, Vonnie. Let's have a check on how those Tesla shares are reacting to that latest post from Musk. We're up nearly 2.5% on Tesla. This comes after just a few hours ago, Musk posted on X that he regrets some of the comments he made about President Donald Trump in his post last week. Let's move on to defense. We have Lockheed Martin to the downside. This comes after news that the Pentagon is pulling back on spending when it comes to those F-35s, slashing the number in half that it's asking for, from 48 all the way down to 24. This is as those defense cuts from Pete Hegseth caused the defense contractors to rein in spending. We're seeing Lockheed down just less than 1% in pre-market trade. Lastly, let's end with the share in Europe. I want to talk about Inditex. This is the Zara owner. Posted slowing sales this morning, also warning that FX could hit their bottom line. That dollar weakness seems to not be helping out this major retailer here in Europe. It's the worst performing stock in the Euro Stock 600, down nearly 4%. Bonnie.
All right, Valerie, thank you so much, Valerie Teitel there. And in just a moment, we'll speak to Henry Allen of Deutsche Bank on the market resilience, and later in the hour, Mark McCormick of TD Bank on FX and US exceptionalism. Global stocks bouncing back from April lows when President Trump's tariff hikes kicked in. The VIX now at its lowest since February. Henry Allen of Deutsche Bank weighs in on the strength, writing this, quote, "There's a lot of market resilience and scope for that to continue, so I remain optimistic. Financial markets themselves are acting as an important force in determining policy outcomes. Policymakers don't want market turmoil, and when there is turmoil, then that encourages actions to avoid that." He joins us now. So, Henry, what will be the first signs of fragility for you if this doesn't continue? So, for example, we have an auction later on today. Will that be an important indicator, or are you waiting for more data?
So for me, at least, I think I'm fairly sanguine on the auction because, the 3-year auction was fine yesterday, and actually quite a bit of the fiscal news we've had at the margins has been more favourable in the last few days. Yes, it's true that we had the Moody's downgrade last month. We then had the fears over the US tax bill. But actually, the direction of travel in the Senate now looks like that various senators like Rand Paul want further spending reductions in order to pass this bill. So I think that's looking more positive. I think the big event risk on the horizon is actually now July 9th, which is the end of the 90-day extension to the reciprocal tariffs. And clearly, if those come back in, then that would have a much more negative impact on the data, just as we saw after the first Liberation Day on April 2nd.
Yeah, exactly. And we've just come out 2 days of talks with China. It doesn't look like we got anything new out of it. We perhaps will go back to the Geneva Agreement and that implementation. So just on the China side of things, does that help the market any, or is all of that priced in?
I think it's mostly priced in, and I think as Howard Lutnick and others have made very positive noises over the last 48 hours saying that talks are going really, really well, I think it's clear what the scope of an agreement might be. It seems as though by the sounds of it that there'll be kind of easing in restrictions on rare earth metal exports from China in return for the US doing something on chips. And I think, both sides do want to reach some sort of accommodation here. It's in both sides' interest that that happens. I think the way in which on May 12th we saw the US tariffs on China come all the way down from 145% to 30%, despite the fact that Trump was previously talking about 60 or 80% tariffs, is indicative of how both sides do want to reach a deal. So I think that further adds to that impetus for market optimism. And of course, Trump himself is very much fashioning himself as a deal maker. I mean, I remember in his first term that he did, just before the pandemic, reach a phase one trade deal with China. So I definitely think that's where they want to get to.
What about the European discussions, Henry? Because we're hearing that they may go on past the deadline. They may go on past July 9th.
So I think those are really important as well. And I think what several economic blocs, including the EU, are now waking up to is that, effectively Trump and the US are fighting a war on several fronts on the trade thing, because they've got negotiations with China, negotiations with the EU, negotiations with Japan, with India, with lots of countries at once. And the US are the ones who need those deals in order to kind of settle things down on the economic and market side. So I think what we might be seeing is the EU kind of effectively playing for time, realizing they've got some leverage here, because actually that was what China did. They took a pretty tough approach, were willing to retaliate, and then they got those tariffs dialed back by 115 percentage points. Similarly with the EU, they have said that they'd be willing to retaliate. They actually extended their threatened retaliation in return for the 90-day extension on the reciprocal tariffs. But they've said quite clearly, if those tariffs do come into place, they've got a bunch of stuff they can retaliate in kind. And obviously the EU, like China, being a pretty similar economic size in GDP terms, that gives them the leverage that other smaller countries wouldn't have over the United States. So I do think they want to reach a deal. The mood music is sounding very positive. But like China, they've got various tools of leverage if one isn't reached.
And Henry, I do want to bring in some headlines that we're getting now from CCTV, just out of China, releasing a statement after the talks with the United States, urging the US to resolve disputes via dialogue, saying there are no winners in a trade war, and that further playing the role of China-US trade talks will be important, that China is sincere in its talks with the United States and wants to keep communicating with the United States. So some positive signals there out of China, but also a warning that there are no winners in this trade war. So, Henry, let me get back to you. Presumably this will continue. We do have Scott Bessent going to Capitol Hill today, for example. Also speculation that he might actually be in the running to be next Fed chair. Now, that wouldn't happen until next year, assuming Chair Powell gets to play out his role. What do we see in terms of Fed interest rate moves this year? And does Bessent then take over?
So I think the Fed will be reluctant to move anytime soon. I think if you look on the inflation side, obviously we've got CPI later. Inflation is still lingering a little above their target, and given the tariff impact that is coming down the tracks, that's likely to stay there. So I don't think they've got much to do on the inflation side. And then on the other side of their mandate, on the labour market, payrolls are still coming in above 100,000. So I don't think there's any pressure to cut rates there. So I think they'll be cautious about moving too quickly. On the Bessent story, I mean, we'll have to see what happens. But actually, one thing I was struck by is that there are precedents for Federal Reserve chairs then becoming Treasury Secretary, actually, or vice versa. So, of course, Janet Yellen, who was Fed Chair from 2014 to 18, she then became Biden's Treasury Secretary as well. So there are precedents for this. I mean, Alan Greenspan was widely, before he became Federal Reserve Chair in the late 80s, was widely speculated to be a potential Republican Treasury Secretary at some point. It never did happen. But that wouldn't necessarily be as surprising as it looks. It just hasn't happened so much in recent times.
If we were to get Bessent, or indeed a Kevin Warsh, which is another name that's been out there for quite some time, Kevin Hassett too, although perhaps not quite as much of a favourite as the other two. Do we get a lower 10-year yield just because of that fact alone? We're at around 448, 450 now. Is that fair value, and where would we go?
So I think an appointment like that would certainly reassure markets, because these are all individuals, the ones you mentioned, with Wall Street and market experience, particularly Scott Bessent in question. But I don't think one individual appointment will matter too much for the trajectory of yields, partly because, of course, the Fed does operate by committee. That even if you had a very rogue pick to be chair of the Federal Reserve who markets weren't expecting, you've at the end of the day got the entire Federal Reserve Board of Governors, all the regional bank presidents, who could in theory outvote them. And several of those positions aren't coming up until quite some time later. So I think clearly the Fed chair will set the direction of travel, but you've also got that broader FOMC committee who they matter to. So it isn't just about one individual, in my view.
Henry, then are we back to sort of regular correlations? It sounds like you're pretty supportive on the equity market and you're pretty sanguine about the bond market. So is that what we see from here on out, or could there be wrinkles?
I think so, actually, because we're seeing this kind of bond equity positive correlation come back, and I think that's feeding on itself because as bond yields have come down in recent years, that is helping to ease financial conditions, so supporting the equity market. And also as bond yields come down, you kind of get this virtuous circle that people are less worried about the debt trajectory because yields are coming down. And in turn, as those fiscal fears ease, that can bring yields down further and help support the equity market. So I see no reason in the short term why that shouldn't continue because, yes, it's true the 30-year, of course, has been probing that 5% mark, but it's really struggled to go above that. And I think to some extent that's because policymakers, as we saw after Liberation Day, don't want to see a big spike in yields and will take corrective action if they need to prevent US debt becoming unsustainable. So I think as things stand, we've got a pretty supportive backdrop. And I think the fact that the S&P 500 is less than 2% away from its all-time high, despite the fact we had a very serious US recession scare in the last couple of months, I think that's indicative of just how resilient this market is right now.
Yeah, it is pretty phenomenal. That was just a little bit more than a month ago. Henry, thank you so much for joining today. That is Henry Allen of Deutsche Bank. Much appreciated. Now on to other top stories trending on the terminal this morning. Sources say the US and Mexico are nearing a deal that would remove President Trump's 50% tariffs on steel imports up to a certain volume. Commerce Secretary Howard Lutnick is leading the talks. President Trump is not involved in the negotiations and would need to sign off on any deal. Elon Musk has set June 22nd as a tentative launch date for Tesla's robo-taxi service. But Musk also said in a post on X that the date could shift because Tesla is being, quote, super paranoid about safety. Nintendo's Switch 2 hit a sales record. 3.5 million units of the console were sold in just 4 days. Nintendo's priority is to sustain launch momentum, but it does face challenges of catching up with demand and potential supply disruptions due to US tariffs on China. Coming up, no winners in a trade war according to China. We'll bring you the latest as Beijing and Washington wrap up trade talks in London next. This is Bloomberg.
This was the first step, the framework. We had to get sort of the negativity out, and now we can go forward to try to do positive trade.
I just think we feel positive about engaging with the Chinese, understanding the real challenges.
Both sides have agreed in principle to a framework for implementing the phone call between the two leaders on June 5th and the consensus they reached in Geneva.
US and Chinese delegations there speaking in London after wrapping up 2 days of negotiations. Both sides agreed to an implementation plan for trade relations, now awaiting President Trump and Premier Xi's sign-off. For more, let's bring in Bloomberg's Lizzie Burden in London. So, Lizzie, what's next for the US and China after these 20 hours of talks?
20 hours indeed, Vonnie. I just want to wind back to just after midnight, that marathon session of talks yesterday. The US Commerce Secretary Howard Lutnick and the US Trade Representative Jamieson Greer, as you heard there, emerging with this framework to implement the Geneva Agreement, this 90-day tariff truce that, as you know, we're about a third of the way through. And what they're saying is really the way through this impasse is that Beijing is agreeing to send more rare earths to the US, and in exchange, Washington is agreeing to roll back some of the export controls that it had brought in retaliation. What next? Well, what happens if there's a blow-up in relations again, as we've seen since the Geneva Agreement? And Bonnie, it's perhaps not encouraging that Greer says there aren't any more meetings in the diary. So there isn't a decoupling happening, but we're not out of the woods yet. And the other point I would make, and I think this is crucial, the export controls have really emerged as a really important front in modern trade warfare. Yes, Donald Trump may love the word tariff, and indeed a court has ruled that he can proceed with implementing his tariffs, but export controls, Beijing has proved, are a very effective way of raising a country's leverage in this trade warfare. Now, while Trump is trying to rustle up deals with the likes of Japan and India and South Korea, President Xi is doing that too. He's been on the phone with the newly elected South Korean president as well. So this could be a long road ahead. And in terms of that US-China deal, as we learned from the first Trump administration, it took 18 months months to get to phase one. So, Bonnie, it looks like we're in this for the long haul.
Absolutely. And again, just to reiterate a statement just now from CCTV out of China saying it's not afraid to fight a trade war, but it doesn't want to, and urging that the two sides continue communications. When it comes to the US's negotiations with the European Union, where are we at, Lizzie?
Well, interestingly, we've had a development on that just this morning from our colleagues Alberto Nardelli and Jorge Valero. You know, Bonnie, that in the past 2 weeks, the two sides had agreed to fast-track the talks. And Maroš Šefčovič, the EU's chief negotiator, was planning to meet up in person with Lutnick and Greer. But what our colleagues have reported is actually that Brussels sees July the 9th, this reciprocal tariff deadline, as the best case scenario for when the US and the EU are going to reach a deal. And that's because there is just so much to talk about, whether that's tariffs, non-tariff barriers, steel and aluminium, or all of the many critical sectors that they need to thrash out deals on, whether that's autos or chips or pharma. I could go on. So really, just as Trump is learning when it comes to Beijing, he might not get a deal as fast as he hopes when it comes to Brussels.
All right, Lizzie Burden, thank you so much in London there for us. Much appreciated. Back in the US, we're keeping an eye on Tesla. That's as CEO Elon Musk took to his social media platform X earlier this morning to express contrition. He said he regrets some of his posts about President Donald Trump last week and that they, quote, went too far. For more, we're joined by Bloomberg Global Business Editor Joshua Gallu. So, Josh, what exactly does Elon Musk want from this? Surely contrition is just prostrating himself in front of Donald Trump. Will it actually buy him anything?
Well, it might. You know, we've seen in the past that Donald Trump is a very transactional politician and man. So, you know, this explosive breakup that they had last week, very public and personal on social media, you know, this has happened before with Donald Trump, where he has a big fallout, and then he's willing to come back to the table when people express regret or get on his side. Musk, to your point, has a great deal to lose by going into a prolonged or protracted or escalating fight with Trump because of his exposure, his company's exposure to government contracts, and the willingness or apparent willingness of Trump to go after those. So I think what we've seen is that Musk has done a bit of a, you know, he slept on it and realized that he may have overstepped and picked a fight or gone into a fight that he didn't have great chances of winning.
Now, President Trump said on the Sunday shows at the weekend that Musk faces serious consequences if he does try and indeed help Democratic candidates in any forthcoming elections. Is there something that the president could do to leverage an agency against Elon Musk? Is that one of the things Elon Musk might be afraid of?
I think so. You know, again, the Musk's companies have, SpaceX in particular, has a great deal of contracts with NASA and is heavily exposed there. So, and then you look at other things like the decision to roll back. I mean, this is a congressional decision more than a solely presidential decision, but to roll back incentives for EV purchases, things like that, that are government actions that are hurting his businesses. So I think that, you know, Musk's calculation is probably that, yes, indeed, there's no doubt that the government has a massive impact on his companies, and there's little doubt that Trump would exercise his authority over those agencies to at least make his life difficult, if not even canceling some of those contracts.
All right, we'll see if the president responds later on today. Our thanks very much to Josh Gallu. Coming up, we bring you the latest on the protests in Los Angeles as demonstrators and demonstrations in part of the city get worse and the city receives a curfew. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Time now for our front page news, a look at what's making headlines around the world. First up on the Wall Street Journal, Los Angeles Mayor Karen Bass imposing a curfew for parts of LA from 8 p.m. to 6 a.m. She says the curfew could last several days. The LA Police Department says multiple groups continued to gather together after the curfew took effect and, quote, mass arrests are being initiated. Next up on the New York Times, hundreds of protesters demonstrating in Lower Manhattan outside ICE headquarters on Tuesday evening. They raised bright yellow signs that said, quote, ICE out of NYC in Spanish and in English. Several people were arrested. And on the Washington Post, the Trump administration preparing to begin the transfer of potentially thousands of foreigners to Guantanamo Bay. Officials shared the plans with the Post, including some documents on condition of anonymity. The Department of Homeland Security declined to comment. Coming up, a low volatility environment looking unsustainable again. That, at least, is according to McCormick of TD. He joins us next, right here on Bloomberg. It's 5:30 a.m. in New York City. Good morning. I'm Bonnie Quinn in for Danny Berger with your Bloomberg Brief. Here's what you need to know. We have a plan. The US and China wrap 2 days of trade talks with a preliminary agreement, at least, to ease tensions. Musk's regrets. The billionaire posts on social media that he, quote, went too far with his comments about President Trump. And we're counting down to the latest CPI data, plus a crucial 10-year Treasury auction. So let's have a look at how those futures are faring as we await all of that data, plus that auction, of course, later on today. S&P futures, NASDAQ 100 futures down, but marginally. Remember, we are getting the results of the trade talks. Nothing major, nothing hugely substantial, but maybe also nothing to weigh too much on this market. And you see it with more small cap companies. The Russell 2000 is actually rallying in terms of futures by about 0.2%. Let's look at bonds. Not a huge bid in bonds either. Waiting for that 10-year auction later today. The 2-year yesterday went pretty smoothly, but it's the 10 and 30-year that's going to test appetite, test foreign demand this week. So we will be watching those levels very, very carefully. The 10-year now just under 450. Well, let's get some stocks to watch. Let's get across to London and Valerie Teitel. Valerie.
Good morning, Bonnie. Let's start with a check on Tesla. These shares are rising in pre-market on some decent volume, up nearly 2.5%. This comes after a recent tweet from CEO Elon Musk saying he regrets some of his posts about Donald Trump last week. So with the easing tensions between these two powerful men, it seems like Tesla shares are liking that and rallying in reprieve. Let's move over to defense. Lockheed shares are declining in pre-market trade. This comes after the Pentagon has slashed its number of F-45s. It needed in half, from 48 to 24. Lockheed Martin being the biggest U.S. defense contractor, seemingly not liking that news, down 1.4% in pre-market. Lastly, let's end on quantum stocks. These are taking a leap higher in pre-market trade. Some recent comments from the NVIDIA CEO, Jensen Huang, saying that quantum computing has reached an inflection point. He's recently been quite bearish on quantum computing as a technology, saying it's around 10 to 20 years away, but he seems to be changing his tech, and we're seeing these pre-market stocks of quantum computing jumping higher in pre-market trade.
We'll see just how much they rip at the open at 9:30. Valerie, thank you so much. That's Valerie Teitel. Just under 3 hours to the latest CPI print, McCormick of TD Bank saying that he's a little cautious, writing, quote, the low volatility environment feels unsustainable again, linked to the underlying risks around data, inflation, interest rates and tariffs. I'm pleased to say Mark joins us now. He's head of FX and EM strategy globally at TD. Mark, thank you so much for joining. It does feel like April and all of the turmoil that we saw in April is long behind us. However, those fragilities can't just have disappeared, can they?
No, I think they're just kind of hiding underneath what's a very confusing market. It's, what we're seeing is there's not as much, we're more range bound. There's more consolidation in markets. There's not really a major theme. Kind of keep languishing back and forth between, should we focus on tariffs? Should we think about what's going on with data? Should we focus on the trade war? So I think a lot of, at the end of the day, positioning is very extreme. It's very lopsided. I think there's a lot of confirmation bias and people are kind of looking for certain types of headlines to trade certain types of themes. But underneath the surface, what's really there is inflation's bubbling. We're expecting a softer data print today, but it's just we're waiting for the trade-related impact to come through in inflation, which is maybe not going to come through this month, but it's going to come through in the next couple of months. We have that. We also have essentially around the fact that the volatility around the trade uncertainty and where these things are going is also willing to be unlocked. It's just, we have a framework for a deal with U.S. and China, and that's basically all we have right now is a framework.
Yeah, Mark, in one of your recent notes, you say that in the months and quarters ahead, the U.S. is in a precarious position to fund its deficits, basically relying on the kindness of strangers. Are we waiting for that one auction that really maybe doesn't fail, but shows really less significant appetite? And could that come this week?
Well, the other common theme around what could bring back volatility is interest rates. So again, we're focused on data, and data's kind of showing, we're watching how these surprises come in. But the other thing that's been driving pretty much global bond markets is term premium. It's a function of what's happening in Japan. It's a function of what's happening in the US. I would say what's happening is the fiscal taps are broken. If we look at pretty much government spending over the next couple of years, even coming out from expectations of the IMF, is we're starting to see extremely high rising budget deficits in an era where we don't have wide, massive output gaps, which is essentially governments are spending money on redundancies, and they're doing it because the global order is breaking down. Foreign policy, economic policy, there's no longer coordination, so governments are kind of forced to do their own thing. So I think the problem for the U.S. is these deficits, primarily if you look at U.S. Treasury holdings, is driven by Japan and emerging market central banks in Asia. So is the further that the U.S. goes from Asia, the further that we kind of move away, and the more that Asia may be realigned with China, it's going to be very hard for the U.S. to fund the massive amount of supply. And the common theme we keep hearing from clients globally is when we talk to them about where they want to be invested, they want to downgrade their exposure to the U.S., whether it's equities or whether or not they want to be downgrading their exposure to U.S. Treasuries, because there's bond supply coming back in their own region. Germany's issuing fiscal stimulus. Japan's doing fiscal stimulus. The world's offering more supply of government bonds, which is going to put a premium on treasuries.
And I just wanted to mention that literally just a few minutes ago, we got a headline that Hong Kong's pension fund managers have formed a plan to sell down their treasury holdings within 3 months if the US loses its last recognized top credit rating. It's getting quite serious now, Mark. I also want to ask you about the US dollar. We've seen a huge amount of weakness recently. Does that continue? Would you fade any rallies here?
Yeah, so I think what FX is, it goes back to the first point on volatility. I think the major problem right now in trading FX is there is a extremely massive discount in the dollar. If you just run rate differentials to the US dollar, it's depending on the model you run, 3.5% to 5% undervalued. That is absolutely supported by our positioning models, which again show things that are extremely biased against the dollar. So we're kind of in this world right now where no one likes the dollar. Everyone knows that no one else likes the dollar. And, as data's coming in, we're looking at essentially correlations around interest rate differentials. It's not very normal for the dollar not to care about rates at all. So the thing that worries us is the sequencing of this is where, again, we kind of think the dollar can rally a little bit over the next month, over the next 6 weeks, depending on inflation data, depending on U.S. growth, depending on data surprises themselves. So if U.S. data comes in better than expected, that helps erode some of that positioning. However, we do think that if you do see any dollar bounces, they are very good opportunities to sell. We're expecting the BDXY, the Bloomberg Dollar Index, which includes G10 EM, to fall by at least 5% through this year from these current levels. So I would say in a tactical market, you look at positioning, you look at valuations, things that are stretched. From a macro and a capital flow perspective, you should be selling the dollar throughout the year.
Another 5% from here, Mark. Thank you so much. That is Mark McCormick of TD Bank. And now 2 other top stories trending on the terminal this morning. Sources say the US and Mexico are nearing a deal that would remove President Trump's 50% tariffs on steel imports up to a certain volume. The talks are being led by Commissary Howard Lutnick, and the president would need to sign off on any deal. The people said the agreement has not yet been finalized. A human-sized Labubu doll sold at a whopping $150,000 at an auction in Beijing. The one-of-a-kind mint green Labubu was put on auction along with 47 other Labubu collectibles. Pop Mart, the Beijing-based maker of the monster dolls, has seen its shares surge more than 180% this year. Nintendo Switch 2 hit a sales record. 3.5 million units of the console were sold in just 4 days. Nintendo's priorities is to sustain launch momentum, but faces challenges of catching up with demand and potential supply disruptions due to US tariffs on China. Coming up, there are no winners in a trade war. That's the latest line from China. We'll digest the talks between the US and China next. This is Bloomberg.
This was the first step, the framework. We had to get sort of the negativity out, and now we can go forward to try to do positive trade.
I just think we feel positive about engaging with the Chinese, understanding the real challenges.
Both sides have agreed in principle to a framework for implementing the phone call between the two leaders on June 5th and the consensus they reached in Geneva.
Positive noises overnight from the US and Chinese delegations in London after both sides agreed to a plan for trade relations. The next step is sign-off from Presidents Trump and Xi. For more, let's bring in Bloomberg's Brendan Murray, who leads our global trade coverage. So, Brendan, we did get a statement just in the last few minutes out of China saying that it's not afraid to fight a trade war, but it doesn't want to, and urging that dialogue continues. How positive is this for something more substantial than what we had already?
Well, the key here is that they have established a mechanism to keep talking. That wasn't the case a few weeks ago. They have now decided to look at the next several weeks and probably the next several months as a period to try to come to some sort of agreement on these differences that they have over everything from rare earth mineral exports to tech exports from the U.S. So this is a small step forward, but it's in the right direction. If what you're looking for is the U.S. and China to coexist and trade in a way that's not damaging to the rest of the global economy.
Yeah, I mean, there's definitely lots of opinions out there. Terry Haynes of Pangea is saying this is really a cloud over any market positives. He says neither side really wants a comprehensive trade deal right now. On the other hand, you've Greg Valliere saying these are glimmers of hope. I mean, there are things that both countries want from each other, right? Can that be achieved relatively soon?
Absolutely. There are some things that they can achieve, and if they can achieve them without having those sky-high tariffs that were on a couple of months ago that was basically cutting off trade between the two countries, then all the better for a positive outcome going forward. What a couple things we're going to be looking to see next is whether the two leaders who've already agreed to visit each other in their respective countries, whether those kinds of formal declarations of cooperation start to take hold, or whether we see this kind of 2 steps forward, 1 step back sort of approach that we've seen between the Geneva Agreement a month ago and the past 2 days in London. We're basically back to where we were in Geneva. It just took a month to figure out how to implement that agreement, and it seems that the U.S. is now satisfied that that deal will be implemented, and some of those rare earth export permits will start to flow again.
Is there any scenario under which either of the premiers decides that this doesn't work? Or I mean, they both really have to sort of underline this now and say, yes, we can move forward from here, right?
Yeah, the signaling from both sides is that we really don't want to get into an escalatory situation where we hurt your economy. That's just going to backfire on us. So they tried that in April with the 145% tariffs on China's economy, and it inflicted some pain on the U.S. economy. So, and the markets reflected that. And so the Trump administration has come back from that sort of cliff scenario for the Chinese economy and the U.S. economy, and has learned a lesson that, you know, China has some leverage in this situation too with these mineral exports. So both sides now have sort of sized each other up over the past couple of months, and they see it's better for us to work together than to tear the relationship apart.
And certainly those are the noises coming out of China this morning as well. Brendan, thank you so much. That is Brendan Murray in London. Staying in Washington, Bloomberg learning that US Treasury Secretary Scott Bessent is emerging as a contender to be the next Federal Reserve Chair. Here's Bessent offering his view before last year's election on how a shadow Fed Chair might supersede Jerome Powell before his term ends.
The new Fed Chair nominee would give forward guidance beyond the current Fed Chair's sell-by date. And then you would know the market could structure a forward curve since then.
For more, we're joined by Bloomberg's Adam Blenford. So, Adam, what do we know about Bessent's prospects to succeed Powell? Right now, it's sources close to the administration and telling Bloomberg that, he is a contender. But how would it work?
Good morning. Well, what we know is, obviously, thanks to great reporting by our colleagues in D.C., it's interesting that, of course, remember that Jerome Powell was appointed by President Trump in his first term, took office in 2018 and was confirmed again under Joe Biden. But as you say, Treasury Secretary Scott Bessent has seen his star rise pretty quickly since President Trump came to office this time around. He's been very visible on the world stage, from talking to President Zelensky in Ukraine about that situation, and been very visible on the tariffs issue, and has been very reassuring and widely respected because of his heritage as a hedge fund expert and a hedge fund manager, and a guy who has the confidence of the markets. What will be interesting is to see whether that could translate into a monetary policy position. Trump has been seen to turn his focus very clearly and right directly on Powell in recent months, calling him out pretty brusquely on social media, calling him a fool at one time, and insisting that he moves more quickly to lower interest rates. So what's really fascinating will be to see if these moves do move forward with Bessent as a leading contender for the Federal Reserve, whether that maintains distance, independence and critical thinking, considering his close relationship with Trump. But equally, lots of our reporting suggesting that he would have great respect and confidence from many of those who are watching the Fed very closely for important moves.
Absolutely. You'd have to wonder if he would want to give up the Treasury job too, though. Let's move across the country now, because downtown LA is actually under curfew at this moment, as protests had been continuing in California. And obviously they're expanding to other states now as well. Can you give us the latest on the demonstrations and what they're accomplishing?
Well, in terms of the situation, we understand that clearly the curfew was put in place by the Los Angeles mayor from 8 p.m. till 6 a.m. So a number of hours still to run there. We've got a total of 380 people that we're reporting were arrested since the weekend in the greater Los Angeles area. The Los Angeles Times reporting a small number of arrests, modest number of arrests overnight early in the evening since the curfew came into place, but largely no reports of any large-scale disturbances. The curfew's in place in a 1-mile area of downtown LA, and did it have some impact on transit, it comes after thousands of National Guard and 700 Marines were deployed by President Trump to the city. That was in a bid, according to the president, to protect immigration agents who were carrying out raids in that downtown LA area. But obviously protesters reacted pretty strongly against that presence, and the governor of California and indeed the mayor of Los Angeles have been really resolute opposing that. There have been some calls for further nationwide protests and small-scale protests in other cities, but nothing on the scale of what's happened in Los Angeles. And indeed, my understanding is that LA at this time and in the last 12 hours or so, much quieter than in the previous days beforehand.
All right. Well, that curfew continues for the next few hours. Adam, thank you so much. That's Adam Blenford. Tesla shares also in focus in the pre-market. That's because the feud between the world's richest and most powerful men has another episode. Tesla CEO Elon Musk took to his social media platform X earlier this morning to express contrition. He said he regrets some of his posts about President Donald Trump last week and that they, quote, went too far. For more, we're joined by Bloomberg Global business editor Joshua Gallu. So, Josh, President Trump has already said in public that he's basically broken with Elon Musk and that he doesn't see, the friendship or even the working friendship being repaired. Could that change, or is Musk just trying to minimize any potential future damage?
Well, I think both those things could be true. It depends what happens going forward. So, of course, Musk and Trump had this feud last week, and some of the tweets became quite personal. And Musk realized, I think, after hearing from people that it was not going to benefit him to escalate a fight with Donald Trump. Part of what he had said was that he would fund Democratic campaigns in the event that the tax bill goes through and other measures. So, that is something that in the midterms, right, in next year. So if he were to continue down that line and actually be active in funding opposition to Trump and the Republican Party, this would escalate dramatically. But of course, Trump is also a very transactional person, and while he has been known to hold grudges against people for personal reasons, he has also been known to come back to the table with people if there is reason to do so, whether it's political or economic or otherwise. So I think the months ahead, we're going to have to see if Musk is able to sort of keep a lid on his feelings about some of the legislation and actions from the administration that he doesn't like. If so, I think there's room for them to mend fences, even if not to the level that they collaborated before. But if he continues to go down a more provocative line, then he will. Then it'll just escalate.
And then, of course, just hours later, he talked about setting June 22nd as a launch date for Tesla's robo-taxi service, which is really just not even a couple of weeks away. He did say we're being super paranoid about safety, so the date could shift. But again, sort of moving the narrative back to Tesla, the company, right?
Yeah, exactly. And it's back to Tesla, the company, but it also underscores the exposure that Musk has to the federal government for regulations in order to get his robotaxis on the road, and all the way to SpaceX, right, where he needs government contracts to be doing that business. So he will try to move that back to the company, and he is trying to refocus on the company, but it's deeply tied to politics.
Deeply tied indeed. Josh, thank you so much. That is Joshua Gallo for us. Do stay with us. More next on Bloomberg Brief. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Now a look at what's ahead today. Of course, US CPI coming in at 8:30 a.m. Eastern to really kick off the day. And then, of course, Treasury Secretary Scott Bessent testifies before the House Ways and Means Committee. That begins at 10 a.m. Eastern. And an all-important Treasury auction. The Treasury will offer $39 billion of 10-year notes at 1 p.m. Eastern. Let's take a look at some movers now before the cash open. Musk saying he regrets some of his posts about Trump last week, helping Tesla shares, although they had been on an upswing anyway most of this week, up 2.25%, at least in futures trading. Pre-market, Lockheed Martin taking a hit from the Pentagon slashing its request for Air Force F-35s in half. And First Solar higher as Jefferies raises the stock to a buy with a price target at $192. This is Bloomberg.